As I mentioned in previous videos, I've been more focused on the small cap growth space, given the strength that we're seeing there right now relative to the indices, which still appear to be in a downtrend. And given the drawdown we've already experienced in the small cap space, I think it just makes more sense to start dollar cost averaging into that area. And another area of interest for me recently has been international and emerging markets, which as investors, we have this thing called recency bias, which allows us to believe that US equities are always going to outperform, which over the long run, this has been true, but there have been periods in history where international and emerging markets have outperformed. And I think if the recipe is there for that, it probably is there right now. So I'm going to talk about two stocks today which intersect these two areas, and it's in the payment processing space, Adyen and dLocal, which I think are great companies, mostly focused on e-commerce, of course. So I think this will be a good one, so stay tuned. Hey everyone, my name is Bill Hawk, and on this channel we talk about stocks, crypto, real estate. And at any point in this video, should you receive some value, please hit the like button and subscribe. It helps me out with the YouTube algorithm. It helps us reach more people. And if you would, I'd really appreciate it if you join the newsletter and the Discord below, so we can all create a community and just bounce ideas off each other, because that's essentially my objective. Starting with Adyen, it's a Dutch company that allows businesses to accept e-commerce, mobile, and different point of sale payment options. It's basically a payment processor that's no different from Square or Block and PayPal, etc. It was founded in 2006 by Arnoud Shudjioff and Peter van der Doos. I probably butchered the name, but the latter is still the CEO. The company employs more than 2,000 people in over 27 countries with a market cap of nearly 65 billion. It's not exactly a small company. Adyen offers a full stack solution, including managing gateways, risk management, processing, and acquiring. It makes the payment process easy for vendors, as it should. If you're familiar with any of them, like Stripe, is again just basically the same thing. But you might be surprised at how big Adyen is, considering it has clients like Uber, Spotify, Microsoft, Alibaba, and so on. Although it's mostly European, they have clients in Australia, parts of Asia, as well as North America. And as you can see here, most of their growth is coming from North America right now, but 40% or more of their payments processed are currently in the EMEA region. As part of learning about the company, I really wanted to see how its payment volume compared against Stripe, a private company who I would name as its top competitor and the leader in this space. It appears to be processing the same amount of volume as Stripe, but Stripe is likely taking the lead now, given it seems to be growing faster. For what it's worth, Stripe is one of the hottest anticipated IPOs this year, and it just closed a private funding round at a $95 billion valuation, so an almost 50% premium to Adyen. Based off that alone, Adyen's valuation is compelling. Just for perspective, PayPal, with a market cap of 128 billion, processed 1.2 trillion of total payment value last year. So based on the metric of EV over TPV, if we can make that a metric, of course, PayPal is trading at the same multiple as Adyen, which is pretty impressive, given that Adyen has twice the growth rate, but PayPal has twice the take rate, which I'll get into later in our valuation, so stay tuned. But first, let's take a look at dLocal, which pretty much has the same business model as Adyen, so I won't go into it in too much detail. But what differs them? Mainly, dLocal is focused on the emerging markets. This is a tough space to enter, given that these regions don't have the same banking penetration. The population haven't really adopted cashless or other forms of electronic payments, which make it more difficult to obviously penetrate. The company was founded in 2016 by 4 alumni of Uruguay's biggest private university. Sebastian Kanovich, 31, is CEO of the first unicorn out of this tiny South American country. It's an amazing success story. As you can imagine, they've grown really fast and have large clients like Nike, Uber, Netflix, Amazon. In fact, 330 plus merchants use dLocal in emerging markets. It has a true purpose in place, which is why I like this niche and moat is carving out as an early mover. According to America's Market Intelligence, or AMI, banking penetration in some of these countries can fall below 20%, which you can see here, as credit card holders' percentage in some of these countries are actually quite below that level, which is an exciting opportunity because it just means that most of the population, and as you can see here, about 80% or so, are transacting domestically. There's some cross-border that has opened up, but again, this is the total addressable market for dLocal, which is an exciting opportunity for them to take on. All right, so now let's go into valuation, and as a reminder, these valuation spreadsheets, which I'm going to go through today, are available to members of the email list, which is linked down below, as well as members of the Discord, which I highly recommend you join, because then we can discuss these. You can make your own models and assumptions, and it just gives you a lot more conviction should you choose to invest in these companies. And of course, I'm happy to help in any questions. So first thing we're going to take a look at is the key financial metric, or KPI, which is relevant for all of these companies, and in this case is TPV, or total payment volume. If you remember from the videos on PayPal or Square, again, this was the same metric. So I'm going to reference PayPal throughout this video because I think the valuation there is very compelling, and I think it can serve as a really good benchmark should we choose to be conservative, which is always my approach. So in terms of TPV for Adyen, you can see that it grew about 44% in 2021. Again, this is adjusted for currency because they report in euros, whereas dLo or dLocal had a growth rate of 200% during the same period, but this is including an estimate for Q4, which I would update after I get their earnings report. And you can see that it's quite the difference. This is much higher growth than Adyen, but again, the Adyen TPV is more than 10 times that of dLocal, so that we have to factor that in. And just for comparative purposes, we're taking a look at PayPal now. They grew TPV 33% in 2021, but again, there's 1.2 trillion transacted on the platform. And again, PayPal is very compelling, so I'm going to keep referencing that just so you can see the difference in growth. 33% in PayPal, 200% in dLocal, and 44% in Adyen. And this is just for TPV, not revenue. And you can see revenue is a function of take rate. And take rate is essentially what they're taking as a percentage of what's transacted on the platform. So starting with PayPal, you can see their take rate is about 2%. It has come down, but 2% is a pretty healthy level. Adyen, for some reason, the first thing that sticks out to me, the take rate is quite low. It's about half of that of PayPal, which I mentioned previously. 1% is a pretty low take rate, and it just leads me to believe it has to be this low in order to keep competition out of the market, and you're basically pricing out competition. But that's only the case when there's lack of a moat, and that you can see with dLocal. Their take rate is much higher, near 4%. But the thing that does concern me with dLocal is the fact that their take rate has been reducing over time. But again, their margins, operating margins, profit margins, 30%, is really, really impressive. There's nothing like that when you look at the competition. For Adyen, for example, their operating margins and net income margins of 15% and about 7 and 8% is lower than PayPal, which I'm looking at right now. And PayPal, obviously, it's a much more mature company, so they've optimized for margins. Although their operating margins is about the same, their net income margin is much higher. But again, Adyen, what concerns me is the fact that the take rate and the margins are a lot lower. That's the first thing that sticks out to me. Although they do have an impressive growth rate and a good story, dLocal in this area is probably the winner because they're obviously highest margin. And again, but the thing that does concern me with dLocal is this margin seems to be decreasing, so we don't know how scalable this is, and that's the question I would have with dLocal. So these are all risks to consider. So back to Adyen, assuming a compounded annual growth rate of 25% for TPV, and assuming similar metrics or trends of metrics for revenue and margin as a percentage of TPV, I get a fair value per share of around $60. This is quite high. This is a 180% premium to what they're trading at right now. But again, there's a lot of uncertainty in this. I've looked at benchmarks and this is probably a lot lower. So in the case for these companies, I would put less value on fair value per share, and I would again balance that or be a little bit more conservative by factoring in a higher compression on their valuation metrics such as price to free cash flow, price to sales, and price to earnings, which you can see right now is trading at 124 times earning and 28 times free cash flow. I'm basically cutting these in half, and the way I got these numbers, these targets, was taken as a percentage of what I feel PayPal is currently trading at and the difference in their growth rate. So in the case of Adyen, I'm giving them at a 50% premium in terms of the multiple that it's currently trading at, and basically saying that that's what I think Adyen is going to be given the fact that it's growing faster. But again, the take rate in Adyen is a little concerning to me. So after factoring all this in, I get about 36% upside in Adyen. With dLocal, I get about the same thing, a 33% upside. So for companies like these, I do look for more upside typically. I want to see at least a 50% upside, to be honest, because there is a lot of risk. And I'm going to talk about those risks in just a second. But nonetheless, I do feel like these companies are definitely attractive because they are profitable companies. They're in a segment of the high growth sector, which is actually profitable, not just making a bunch of revenue growth and trading on sales. That's the part that I really like about them. Again, in the case of dLocal, these are quite healthy margins. Now, whether they can scale at that level or not is a question mark, but I would definitely look to see what points we can enter in either of these two companies. But first, let's take a look at the risk. The first risk for both of these companies, both Adyen and dLocal, is the fact that they've onboarded some pretty big customers. So I mean, once you've onboarded Amazon, I mean, who else are you going to onboard to maintain that same growth rate? So that's a big question mark as to whether the growth rate is maintainable. It probably isn't, which is fine, but that just means that there may be some better entry points. The second risk is competition, and I would say Adyen probably has a little bit more of a risk here than dLocal, because dLocal has a little bit of a carved out niche and is a little bit more protected than Adyen, because there's no real barrier to entry other than capital expenditure, which big companies can just come in and do, which we've been seeing more in the payment processing space. There's also buy now, pay later, which is the competition, but Adyen has some form of that. And crypto is also a threat, but again, we're probably quite a bit far from that being a real threat yet. And finally, there's overall economic risk. Should we experience a downtrend globally, and that's not off the table in my opinion, given the macroeconomic environment right now, that's a risk to their growth and their valuations. As you can probably tell, although I can probably work on my enthusiasm a little bit, these are both great companies and I would love to own them at the right valuation. And although my model shows just a 30% upside, I do think that my model is very, very conservative right now. And again, I'm only looking out 3 years from now. If you want to be part of these companies and invest in them, you got to have a longer time horizon. But I'm also being a little greedy right now, given the environment we're in. I would love to see if we can retest some of the bottoms that we just experienced and start averaging in a position there. But if we were to start averaging in right now over the long term, I don't think we can go wrong either. The only reason I'm hesitant right now is because I think there are obviously better risk reward opportunities right there right now, like PayPal, for example. I think PayPal is super undervalued, and if I was to compare the risk reward between both of these, I think PayPal would win, and that's the only reason that gives me some hesitation. But these two are great companies that are doing something in the space that's PayPal probably not focused on, which is obviously international and emerging markets. So again, if I were to pick PayPal, I would like to own dLocal at the right valuation and also Adyen, but again, I would probably give dLocal a little bit of an edge, given that it has a little bit more of a different risk profile than PayPal. So that's it for the video. If you have any questions, again, please leave them in the comments. Join the Discord, join the newsletter. I hope you enjoyed the video. Please like and subscribe if you did, and I hope to see you on the next one. Thanks.